If you are a 1099 contractor, you are essentially paying the IRS for the privilege of using your own phone. Think about that for a second. You're out there driving for DoorDash, freelancing, or running a side hustle, and every time you pick up your phone to check an app or find a client, you're spending money that the IRS might actually let you keep. Most people think they have to pay their full bill out of pocket, but today, we're going to show you how to stop leaving that money on the table. We are diving into the hidden world of mixed-use deductions for cell phones, internet, and software.
It's a huge missed opportunity. Most gig workers think these deductions are only for people with fancy corporate offices, but that's just not true. By the end of this conversation, you'll know exactly how to calculate these write-offs and which forms you need to make it official.
Before we get into the math, I have a quick question for everyone listening. What is your biggest monthly bill right now? Is it your phone, your internet, or your car? Comment below because I am looking for the best hidden deduction to cover in our next deep dive.
That's a great question because the answer usually leads straight to a deduction. The biggest hurdle for most people is fear. I see it on Reddit all the time. People ask if they can actually write off their phone if they also use it for TikTok or texting their family. They're terrified of an audit for mixing business and personal life.
Right, the fear of the tax man is real. There's a common misconception that if a tool isn't used 100% for work, it's not deductible at all.
Exactly, but the IRS standard isn't exclusive use for these items. It's whether the expense is ordinary and necessary. According to IRS Publication 535, an ordinary expense is one that is common and accepted in your industry. If you're a gig worker, a smartphone and high-speed internet are definitely common and necessary to find work and get paid.
So, if I use my phone for both work and personal stuff, how does the IRS look at that?
They use the business portion rule. In Publication 535, the IRS explains that if you use property for both business and personal purposes, you can deduct the business part. You don't need a second work-only phone line to claim a deduction. You just need a reasonable way to show how much of your usage is for work.
And does that apply to internet too, even if I don't have a dedicated home office?
Yes, this is a big one. You don't need a formal home office to deduct the internet you use to run your business. IRS Publication 535 lists utilities as a general business expense. If you use your home Wi-Fi to research clients or upload deliverables, that portion of the bill is a legitimate deduction.
We have a quick scenario for you guys. If you use your phone 60% for work and 40% for family, do you think you can deduct 100% of the bill? A is yes, B is no, or C is only 60%. Type your guess in the comments right now.
I hope they guess C because that is the key to staying safe. Let's look at a real dollar example. Imagine a freelance graphic designer with a $100 monthly cell phone bill. That's $1,200 a year. If they determine that 70% of their phone use is for business, they don't deduct the whole $1,200. They take 70%, which is $840.
That sounds like a solid chunk of change. How does that actually change their tax bill?
Well, if they are in the 22% tax bracket, that $840 deduction could save them about $184 in actual taxes. That's basically 2 months of free phone service just for filling out the form correctly. You'll usually claim this on Schedule C of your Form 1040, specifically on line 25 for utilities or line 27A for other expenses.
Is there anything we can't deduct? I don't want people getting into trouble.
Definitely. First, if you are a W-2 employee, this doesn't apply to you. The IRS removed unreimbursed employee deductions a few years ago. Also, you cannot deduct the base rate of the first landline coming into your home. And the biggest mistake is trying to claim 100% of a personal phone. That is a major red flag for an audit.
Right. So, what is the first step for someone who wants to start doing this?
Start by gathering your bills for the last year. Then, track your usage for one typical week to find your business percentage. Once you have that number, apply it to your total yearly cost and put it on your Schedule C. If you need more details, check out IRS Publication 535.
Share this with one person who started a side hustle this year. They're probably overpaying the IRS by at least $500 in phone bills alone.
Just a reminder, I am an educator, not your CPA or tax advisor. This is general information based on IRS publications, not personalized advice. Tax situations vary. Always consult a qualified tax professional about your specific circumstances before making decisions.